I asked you to come out with me because I wanted your company. You've blotted out the past for me more than all the bright lights of Monte Carlo. But if you think I just asked you out of kindness or charity, you can leave the car now and find your own way home. Go on, open the door and get out.
If you love listening to this show, please consider giving a rating and a review on Amazon Alexa or wherever you listen. We want to continue bringing you this amazing content, and part of our ability to do that means that we need a big audience. Now, it may not seem like much, but rating and reviewing the show will help more people find us, just like how you found this show. Simply on any podcast platform, search for a show, scroll down to the bottom, and push 5 stars. It's that easy. Thanks for supporting the show. Today, I'm joined by Dr. Howard Boltz, Chief Scientist, Insurance and Spatial Solutions at CoreLogic. Thanks for joining today.
Yeah, wonderful, Scott. Thanks for inviting me.
All right. So you have been a professor emeritus of geography at the University of Wisconsin and have specialized in geographic information systems for the past 30 years. I wonder, in the past 3 decades or so, how the field of GIS has evolved and changed.
Yeah, that's a great question. Started out with computer mapping, and then we quickly saw the future was being able to take individual layers of data, overlay it, and use that to make decisions. And so I think we've seen huge evolution, particularly as we've had greater levels of computing power. And today we see kind of the fruits of that labor when we look at Google or Apple or other maps and routing engines, all of which were possible because of the GIS technology and really the infrastructural investment early on of the US government in providing street centerline maps, other kinds of things. So it's been an exciting time to see really the evolution of this space.
Amazing, amazing. And then I'm going to, at some point later on, we'll talk about satellite imagery as well. So first, tell us a little bit about CoreLogic and how is your organization developing solutions that address the implications of climate change?
Great question, Scott. CoreLogic is at its very center a real estate information and solutions company. So our goal is literally to know everything at a very granular level about a particular property. So we collect all of the sort of locational information. We have all the parcel boundaries, structure footprints, so for every building over 100 square feet. Then we have all the characteristics related to that building, information on occupants, and a variety of other kinds of things. And then we can overlay different kinds of hazards on top of that. And so we know what type of hazard is impacting a property, what the building code was in effect at the time, structural characteristics, height of the first floor, all of which allow us to build very, very granular at the individual property level or structure level hazard models.
Amazing. Now, these models are more, I would say, simulation or predictive, or are they happening after the fact?
We're really looking at things kind of 3 different ways. What could happen? What if it does happen? And what if it did happen after the effect? So we have a lot of models that are looking and simulating events based on historical records. So if you look at earthquake or hurricane or others, those are built from long histories of events, combined with then simulations of every imaginable possible event. And so that allows us then to build basically a library of all possible events that we can then compare that to distance away, say it's an earthquake from a fault line, structure type, we can estimate percent damage, and then we overlay replacement costs so we can come up with very, very accurate models. So as companies are trying to understand what could happen, we can work through their portfolios or individual properties to help them understand what's the average annual loss in a year or in 10 years, 30, 50. We also have real-time models built from weather radar where we can identify 15 minutes after an event where hail fell, what the extent of that hail was, what the size. We can then look at wind or water, tornadoes, a variety of other kinds of things. So real time, we can talk about damaged individual structures, or for companies that have portfolios, we can tell them real time what loss potential is. And then post-event, we'll go in and say post-Hurricane Harvey or others, identify all properties that were likely to be damaged. So we can really look before an event, during an event, after an event.
Mm-hmm. Mm-hmm. So for insurance companies, of course, they're thinking about risk and they're trying to price that risk. So effectively, you guys are helping to support through the modeling and simulations ability to be able to properly price that risk according to those particular premiums for residential, industrial, and even public entities for that matter. And you mentioned different types of multimodalities, right? So some are more, let's say, architectural blueprints, kind of the legacy permits and codes, but also other things that you guys are relying on, things that are more sensor-based, climate, even market data, and being able to actually model some of these things. So when you provide this type of, set of services or data analytics, is it more of a probabilistic set of results or range that you recommend, or what is a kind of the end deliverable back to the insurer?
Right. It depends on, I guess, use case, Scott. If it's a underwriting, decision, they'll use all the different perils we have, and then based on typically their historical loss experience, can then the actuaries will look at a base rate and then how much above or below that should be for wildfire or earthquake or some other peril. And then they also are looking at balancing that portfolio to make sure that they aren't overloading a particular area with too much risk, since that's an issue. When it comes to looking at potential events that could be liquidity events like hurricanes or earthquakes, they will absolutely use the probabilistic models to understand what is the probable maximum loss of an event. So if another Northridge earthquake occurred, given all the new building that's gone on, what's their expected loss? And then they'll either get reinsurance for that, or issue a cat bond or some other way to reduce their overall risk. So it really depends on, is it kind of real time, straight through underwriting they're trying to do, or they're trying to get a sense for overall exposure to any single peril or multi-perils. So those are probably the two principal things. And then the third way is we operate heavily in the claims space, so being able to support sort of straight through claims processing also with these models.
So I'm going to bring up intentionally somewhat a distant domain analogy, which is in the context of hedge funds. So hedge funds that have looked at kind of historical simulations, in particular use of Monte Carlo simulations, for example, haven't done as well. If you look at events like GameStop and some of the other recent events that caused some, quite a bit of challenges. I know only one hedge fund that were able to navigate around that because they were able to use certain types of AI that de-emphasize historical data to more the recent types of data. And the reason I'm bringing it up is in the context of climate change, we're seeing that historical patterns, while it could still be relevant, is changing drastically, whether it's the intensity, the duration of wildfires, the frequency, or floods or hurricanes. I mean, I think most of us, regardless of what region we live in the United States, have at some point experienced rather intense or rather strange patterns. So I wonder how you guys factor the the things that are happening now relative to climate change to, vis-a-vis, the kind of historical data that you guys are crunching through?
Yeah, that's.
You may also like our quarterly Ask Perkins event that brings some of the most notable experts and category leading startups in their area of sustainability and human survival on Earth and in space. To register, visit astroperkins.com/events.
Really an excellent question. Shakespeare talked about the past being prologue, and that absolutely is not true for what we're seeing today in the world. With increased temperatures, we know for every 1 degree centigrade, the air warms, we get 7% more water. Simple laws of thermodynamics mean we're going to be putting a lot more water on the ground and potentially a lot more severe events. So what we've done is our historic models really are our baseline. And you can think of that, assuming we don't put any more CO2 in the atmosphere than we're putting in right now. This would be best case scenario, the way we've kind of currently done it. And then we've started to overlay using the Intergovernmental Panel on Climate Change scenarios, the IPCC scenarios, for different levels of CO2 in the atmosphere and what we know that means in terms of atmospheric warming, sea level rise, other kinds of things. We've taken our traditional models, enhanced them with this so we can look and depending on the different levels of CO2, we can predict how much additional flooding is going to occur, or other kinds of events, increased wildfire and that sort of thing. And we're looking at that at the individual property level. So we could essentially look at what's going to happen this year, 10 years out, all the way to 2200. And we can see how properties are increasing in risk in certain areas. Certainly the poster child for that is probably Miami Beach, where already king tides are causing flooding onshore. And as sea level rises, that's certainly going to become more intense. So the past isn't the guide that we're looking for today. We're having to run scenarios that really take into effect increased temperature, increased drought conditions, increased sea level rise. All of those, I think, become kind of predominant in trying to pick things. And you're right about Monte Carlo. We've used a different form of stochastic simulation along with some AI ML to do a lot of this modeling. And so I think we can get very, very precise with trying to understand what future loss scenarios are.
Now, the business of risk measurements, especially those that are predictive, is always tricky. So even though you layer on these types of governmental data that provide some additional perspectives around potential additional risk, if you look at the recent event in Texas where they had a pretty major freeze, I think that most of them really never actually have an experience before. And of course, with some of the electricity and the power going out, it really caused them quite a bit of damage. So how would you describe the level of accuracy down to that kind of single asset or building level in terms of thinking through the potential things that could happen, and how applicable and how what's the confidence level in terms of down to that single asset?
Yeah, that's a really interesting example. We know that we've definitely experiencing changes in the jet stream with climate warming and changes. And that has meant we're starting to see more of these polar vortexes or polar air outbreaks. We can certainly predict that those are going to become more frequent. What we probably can't predict is the fact that the Texas utilities, because of deregulation, decided not to winterize themselves, or the turbines and other things, weren't winterized in a way that would keep power online. It turned out that structures that were close to hospitals, in which the power companies made sure got power, tended to do well if you were on the same grid. but predicting the extent of that damage related to power outage, I'm not sure there's an easy way we could get at that. We could predict which homes are going to be impacted by this cold. We could predict, given age of buildings, building codes, other kinds of things, the likelihood of pipes freezing and other things, but not the extent of the power outages without really knowing more about the infrastructure in that state. So in that case, that wasn't factored in, and you're right, has caused huge insured losses for individuals. And I have many friends in Texas that are still living in motel rooms because of pipe bursting and flooding going on.
Terrible. So I'm going to present another kind of distant domain analogy. This startup that we interviewed a while back called Security Scorecard is quite interesting because in the cybersecurity audit, or let's say insurance sector, there are certain outfits or services that assesses the cybersecurity risk probability of a particular company, and then provides a scoring, which then gets factored into the cybersecurity insurance, as an example. And I wonder, in your case, how some of the more, because we're starting to see a greater rise in, microsatellites or CubeSats that have different types of capabilities, a range, and different types of imagery, for instance, and how those can provide more near-time, if not real-time, input into your modeling and simulation, as well as the pricing, effectively the pricing of the risk.
Yeah, I think we're looking at all kinds of satellite technology, kind of like you're referencing. There's some really exciting things happening. Companies launching satellites that do synthetic aperture radar. So they're able to, in real time, look through clouds, look through smoke. That, in the California wildfire situation last year, in which smoke hung over big parts of the state for a prolonged period, a traditional satellite couldn't see down to the ground, but these can see in real time. And we're able to then absolutely inform our wildfire models, which are predicting which homes are likely to be damaged based on wind speed, direction of the fire, other kinds of things. We're also seeing it in terms of a lot of alerting going on. A number of other companies are launching, small satellites that will give us much more accurate looks at what's happening on the ground. And so virtually every insurance company we talk to wants to be able to get out in front of things. And if there's a major hail event or something else, to pre-alert. So all of this sensor technology is incredibly valuable to us. We've also worked with companies putting sensors on the ground for hail, other events. And so you kind of tie these networks together, and you have a very, very accurate and real-time picture of what's going on the ground. And one of the other things that we found valuable is if you tie this to social media and other things. People love to hold up big pieces of hail or show pictures of trees snapped, and so you can take the satellite imagery and other sensor data and really see on the ground manifestations of that. So essentially real-time validation of what you're seeing, and so I think it's really powerful and will only become more so.
So I have a rather kind of a strange question, probably more business oriented, recognizing that you're the chief scientist there, is that, a lot of the work that you guys are doing is so relevant, not only for insurance, but also for the stock market. Let's just call it, Wall Street more broadly. Because if you look at so many of the quarterly earnings, whether they make it, miss it, exceed it, whatever it is, so much of it, I think from a research is attributed to weather. It's climate, delays in transport, inability to manufacture and, meet the supply chain logistic aspects like we've seen through COVID as an example. All of these things have a bottom line impact to earnings and the market capitalization of these companies, certainly public, but also private as well. I wonder how your data set, as it becomes more enriched and becomes more real time, like you talked about synthetic aperture, for example, and there's many others that are working on different approaches, how you can start to inform the stock market, whether it's the buy side or the sell side. We're talking analysts to firms that are trying to figure out, hedge funds or others that are trying to figure out what they should do, what kind of derivatives or calls or options or straddles that they need to think about. What are you thinking about that? And is that a market that you're already in or you guys are thinking about? Don't forget to visit astroperkins.com to register for our next quarterly events. Past and current speakers include Julianne Hough, actress, dancer, and winner of Dancing with the Stars; Damian Vaughn, former NFL player; Neil Gregory, Chief Thought Leadership Officer at the IFC World Bank, and many more. To register, visit astroperkins.com and click on Events.
I think we right now are playing around the edges with it. There are a number of companies that purchase our real-time products to do much of what you're talking about. If we go back to synthetic aperture radar, for instance, that can identify real-time what the extent and depth of flooding is. And if you have a infrastructure, say a few years ago, we had massive floods in Thailand, which caused huge disruption to the computer industry. And if we kind of do the same thing across, companies are looking at really how can they understand supply chain. Simple as something like a Home Depot or a Lowe's for pre-positioning or getting materials to it. We have a lot of banks and financials that are looking at flood events again. Our ATM networks are out. Where do we put them in? Where do we do other things? We know that over half of all municipal bonds and other types of securities have a climate and weather and hazard impact, which hasn't been historically measured. So you're absolutely right. For any kind of prediction, whether it's related to retail or just in time manufacturing, having this information and kind of understanding what the logistics and other kinds of implications are going to become incredibly important. And so I think we're going to see, as we get better and better AI ML models tied to this, factoring right into what you're talking about, really short-term decision-making and investment strategies.
Okay, great. Thank you for that. Well, for the time being, in terms of the current sectors that you guys focus on, as it pertains to multi-pair analysis or MPA, I wonder if you could give some concrete either use cases or examples of how it's applicable to, things like mortgage, insurance, government agencies, and other areas that you guys focus on.
Yeah, I think one of the things that, if probably the most concrete example I could give you is for hurricanes. If we look at hurricanes onshoring, you have wind, but you also have hurricane-driven storm surge, so saltwater flooding. Plus, you then have riverine or flash flooding, pluvial or fluvial events. Which one comes first, which one's causing the damage, has huge impacts kind of across the financial system. For insurers, they're going to insure against wind, but unless that, say it's a residential property, is in a FEMA 100-year flood zone, it's very unlikely that an individual homeowner is going to have flood insurance. And as we saw from Hurricane Harvey, over 50% of all the flood losses were related to people outside the 100-year flood zone. If water's first, a storm surge comes in, there's just a slab, the homeowner is, on the hook. And if they decide to default or walk away from that property, obviously the servicers and others are going to have a shortfall. So people are displaced after, say, Hurricane Laura, where still today about 6,000 people in the St. Charles area are not back in their homes. They're not paying their mortgages. Servicers have to continue the flow to the bondholders, and that has significant implications. So something as simple as wind versus water is very, very powerful. In wildfires, we're increasingly seeing it's not necessarily the fire itself, but smoke damage. And that's become a major peril for insurers. So, that's an issue. People say, well, how are earthquakes tied to climate change? Well, we know with sea level rise and increased tsunami risk, that's going to be an additional peril. So you have earthquakes, fire following earthquakes, sprinkler leakage, tsunami. So we need to take all these into account when we're trying to understand what the risk is to an insurer, to an individual property owner, to a securitized mortgage portfolio, Fannie, Freddie, the Fed Reserve. It runs kind of all directions.
As you were listing out all the different types of MPAs, it was. I'm just thinking that some of the listeners are probably thinking, is there any place on Earth that's safe? And I think the quick answer would be, there's really no place that you could be immune from any of these types of potential disasters. So thank you so much for the work that you guys are doing. My last question for you is, as we're at the tail end of COVID and getting into mass vaccination, I wonder how this kind of lockdown the last year or so has really fundamentally changed the kinds of conversations or the way businesses are thinking about these risks.
That is a really good question. And I think what we found is over the last year, virtually everybody we deal with wants to automate their systems pretty much from beginning to end. So if it's an insurance company, they want to be able to do straight through processing or claims remediation, without having to send adjusters out. When it's, say, underwriting a commercial property, one of the big criteria, particularly in the western part of the U.S., is what's the seismic risk to that structure. We're now increasingly seeing our earthquake models adopted by large banks that will run that model against that particular structure. And if the dollar loss is below some threshold, they won't bother sending a seismic engineer in. Or if it's a wildfire prone area, they can understand kind of real time what the potential risk is. We're also seeing increasing kind of self-service going on. If it's an insurance company, they're likely to have, kind of self-provision in home inspections where they identify what photographs they want taken and you send them in. We're seeing that in the appraisal space where the average appraiser today is close to 60 years old, and banks and others are looking for alternative ways to appraise a property. And again, one is to get you to take photographs of that, and then we can use our imagery analytic model to validate number of rooms, size of rooms, other kinds of things. So the short answer to your question is, it's really over the last year to try to pull the human equation out and make things as automated as possible. That makes things cheaper, faster, and in many ways more accurate.
Well, that is certainly transforming the industry that has been, historically, been, fairly people heavy in terms of appraisers, adjusters, and agents that are going out there in person. So with that, I've been joined by Dr. Howard Boltz, who's Chief Scientist at CoreLogic. Thank you for joining today.
Thank you, Scott. Wonderful conversation.
If you've enjoyed this episode, take a moment to rate our show on any podcast platform that you listen to. Scroll down to the bottom and push 5 stars. It's that easy. And as always, thanks for listening.